Is Ethereum gearing up for another big run? With price momentum picking up and several bullish indicators aligning, many traders are asking whether Ether is headed back toward the $6,000 level. In this episode, we'll break down the key signals, from exchange balances and chart patterns to liquidity dynamics and market sentiment, so you can understand what's driving the story and what to watch next. Ethereum's price has been steadily advancing, inching closer to its previous all-time highs. That upward move has renewed optimism across markets, and a string of technical and on-chain cues is reinforcing the bullish narrative. But as always, the path to new highs depends on a mix of supply dynamics, trader behavior, and liquidity conditions. One headline metric that's grabbed attention is the supply of Ethereum held on exchanges. Recent on-chain data show that exchange balances have fallen to roughly 12% of total supply, a meaningful drop that suggests less immediate selling supply is available. When fewer coins sit on exchanges, the market can become more sensitive to buying pressure, which can amplify price moves. On the charts, traders are pointing to a bull flag pattern, a classic continuation setup that often precedes further upside after a consolidation. If that pattern resolves to the upside as expected, the technical target being discussed by many analysts is near $6,000. That level would represent a significant breakout beyond prior highs and would likely attract fresh attention from both retail and institutional players. Liquidity dynamics are another critical piece of the puzzle. A reduced exchange supply can create a liquidity shortage if buying demand outstrips the limited coins available on order books. Even moderate buy orders can push prices higher quickly. That kind of squeeze can catalyze rapid moves and potentially force short positions to cover, adding fuel to a breakout. Market sentiment has swung positive lately. Investors are talking up Ethereum's fundamentals and long-term role, not just as a platform for decentralized apps and smart contracts, but also as a store of value and an inflation hedge in some portfolios. That broader interest, from retail traders to institutions, helps sustain higher bid levels and supports the case for further gains. From a technical perspective, Ether is trading above key support zones and showing bullish momentum indicators. If that momentum holds, it increases the probability of exceeding prior highs and testing higher targets. That said, technical patterns are probabilistic, not certain, and sudden shifts in liquidity or macro conditions can change the landscape quickly. Bottom line, the confluence of lower exchange supply, a bull flag setup, and supportive market sentiment paints a bullish picture for Ethereum in the near to medium term, with a $6,000 target circulating among analysts if a clean breakout occurs. Traders should monitor exchange balances, order book liquidity, and whether the bull flag resolves to the upside. Risk management remains essential. Watch stops, position sizing, and news that could alter liquidity or sentiment. That's the current read on Ethereum, promising signals and real upside potential, but not without risks. Stay observant of on-chain flows and market liquidity, and trade thoughtfully as the market unfolds.